So if we were to take a look at the top 7 best monthly paying dividend stocks, and then we dove even deeper to understand their price and dividend history, their fluctuations, we looked at what their metrics are right now, can we determine which one is the very best to own in our portfolio? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are further advancing our review on the monthly paying dividend stocks review that we did last time. We reviewed 26 of the top monthly dividend stocks. We looked at price and dividend history, and in this video we are focusing on the top 7 performing monthly dividend stocks based on that review. We've looked at how they performed in the past, but now we're going to incorporate their current metrics to determine if they're a good fit for our portfolio. Specifically, in this video we are going to look at those top 7 dividend stocks. Then we're going to understand briefly what those actual companies are, when they were founded, what they do, what type of companies are they? Are they a real estate investment trust, a business development company? We're going to look at their dividend payment history and their price history. We're also going to look at what their dividend growth streak is, their dividend compound annual growth rate, their price compound annual growth rate, their payout ratio, and their payout ratio based on free cash flow, in addition to their actual dividend yield. And then after we look at all this information, I'm gonna tell you based on my criteria which ones I would prefer to own, and then ultimately you have to decide for yourself. You guys know how much I love to geek out on spreadsheets, and I've got another one for you in this video where we compound on the last monthly dividend stock video, and you guys know how much I love to deliver massive value with every video that I make. So without further delay, let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Alright guys, let's jump right into it. Here is the updated spreadsheet, which of course I will make available to you in the Patreon community if you're a member of that community. And again, if you'd like to get more dividend content than you receive right now on the channel, you'd like to learn what specific moves I make in my own portfolio and exactly when I make those moves, along with additional dividend content and access to all of my spreadsheets and a monthly dividend stock spreadsheet every single month, then go ahead and check out the link in the description below. Okay, so we've got our 7 different dividend stocks here, some of which were the top performing ones, a few recommendations in the comments. So these are the 7 we're going to look at here. We've got Stag Industrial, STAG, Gladstone Investment Corporation, GAIN, Horizon Technology Finance Corporation, HRZN, Gladstone Capital Corporation, GLAD, Realty Income Corporation, ticker symbol O, Main Street Capital Corporation, MAIN, and Prospect Capital Corporation, PSEC. This is the data here we already had available to us previously when the stock was created, or when the data was available back to their current price, their annual dividend, and their dividend yield. And these were the numbers that came from that previous video here, the 15-year look back when applicable and the 8-year look back. And we looked at these top performing based on trailing 12 months of dividends and portfolio value. But now what we're gonna do is first off, we're gonna take a look at each of these companies, and then we'll go down here and we'll look at some of the key metrics that we're gonna put into our consideration. All right, first up on the list here is Stag Industrial. Now this is a real estate investment trust, which means that this company focuses on acquiring real estate properties and then renting them out to tenants. So Stag Industrial is a real estate investment trust. They focus on the acquisition and operation of single tenant industrial properties throughout the United States. So not single family residences, not 7-Elevens, not anything like that. We're talking industrial properties, very specialized and focused. They own, as it says right here, 494 buildings across 39 different states. So here are the properties they owned, across the Pacific Northwest, down in the South, in the upper Northeast, and Southeast as well. Now with Stag Industrial, let's go ahead and come down here. I wanted to show you really quick their price and dividend payment history right here. So you can see here we've got data going back to 2011, and we can see here that we've had a steady upward climb, which is what we want to see with the companies that, for me specifically, what I want to own. If I'm going to look at a company to own that's got a really high dividend yield, I want to see at least a flat price history. I don't want to see anything that's declining or losing capital value over time. And with Stag, we can see here we start at, in 2011, right around $12 a share, and here in 2021, about 10 years later, we're up to $40 a share, which is what we want to see. Now, while looking at this Stag dividend payment history, this might be a little bit misleading because you think it was a massive dividend cut here. That's not quite what's going on. What actually is happening here is these are all quarterly payments, which is why they're so much higher. Then they transitioned here in 2013 to monthly dividend payments, and we dropped like a rock, as you would expect, because now it's being paid over 12 months versus 4 times a year. So what we really actually see is if we scroll up here, we've got a dividend growth streak of 2 years, otherwise flat. And then we've got a dividend compound annual growth rate lifetime from 2011 through 2021 on average growth of 7.91% on their dividend, which is good. Then we've got a price compound annual growth rate for the life of this stock, 12.28% year over year. Now let's talk about payout ratio. We have two different payout ratios to talk about. The standard payout ratio is dividends paid divided by net income for that year or trailing 12 months. However, I like to use a better, in my opinion, a better ratio, one that's more specific to cash, because dividends, whether it's a real estate investment trust, business development company, regular stock, they're paid with cash. Dividends are paid with cash, and so I like to look at a metric that involves cash flow, specifically free cash flow, or the money left over after you've invested back into the business and paid all of your expenses. Free cash flow. So I like to use a dividend payout ratio based on free cash flow. That is dividends paid divided by free cash flow. I've got both metrics for you here for Stag Industrial and all the other companies here. The payout ratio, the standard payout ratio for Stag is 140%, which means that they're paying out more than their net income and dividends paid. Now, free cash flow, I like to see it at less than 75%, although I will go up to 100% or 90 to 95% of free cash flow for a real estate investment trust, business development company, master limited partnership, etc. Because tax laws require these companies to pay out at least 90% of their taxable income as dividends or distributions to their shareholders in order to keep their tax exempt status. So we see here that they're paying out, even based on free cash flow, 120%, which tells me that they're utilizing some level of debt or leverage to pay out this dividend. That's a little bit concerning for me. All right, next let's talk a little bit about Gladstone Investment Corporation, GAIN. All right, so Gladstone Investment, founded in 2005. They are a private equity fund that focuses on acquiring mature, lower middle class market companies with attractive fundamentals and strong management team. As a publicly traded business development company, GAIN provides both equity and debt capital, which greatly increases certainty and speed of closing, as well as blah, 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 blah. Business development company, guys. This is a company that focuses on, their entire company is built around lending money to small or mid-sized companies that cannot generally get a bank loan from like a Wells Fargo or any type of business loan. So Gladstone Investment will look to either take a portion of equity and finance a company's growth, or just finance growth of the company by making a loan to them. If we want to look into and peek into Gladstone Investment's portfolio, we can take a look at that here. You can see across the United States, it's quite diversified. They've got companies on the West Coast, Upper Northwest, in the South, Southeast, companies like Phoenix Door Systems, the Maids, Brunswick, DPMS, Edge in Texas, and all across the United States. Let's take a look here at their price and dividend payment history. Let's go on down here. So we've got GAIN's dividend payment history. We can see here we started at around 2 cents a share. So GAIN continued to raise their dividend until they were flat here in 2007, 2008, and then probably due to the financial crisis, they dropped their dividend or cut it from 0.08 to 0.04, and then from there it's been a steady increase upwards. And then from my price history, we can see that back in 2005, the company was trading at around 16 cents a share. This is adjusted for dividend stock splits, and dropped a ton down in 2009. It's gained some of that back, but ultimately we're still at a value here below where we started back in 2005. And that ultimately is really concerning for me, because while I definitely focus on owning cash flow companies in my dividend portfolio, I don't want to sacrifice overall capital value in the company. It's okay if it's relatively low growth, if they've got a great dividend, but I don't want them to have a loss of equity over a specific time period. Coming up here to GAIN, let's go ahead and reveal this data and see what it looks like. We've got 2-year growth here for GAIN. But as you can see here, their dividend compound annual growth rate and their price compound annual growth rate are both negative, meaning it's not a big negative number, but it's not a good one either. It's definitely losing value over the life that we covered here for both price and for dividend. Dividend is pretty much flat, you can see here, based on the compound annual growth rate. We look here, we can see that their payout ratio, the standard measure, dividends divided by net income, is 107%. And then we also look at payout ratio based on free cash flow, and this number is negative. And what that actually means is that they don't have any free cash flow. After paying expenses and after reinvesting back into the business where necessary, they don't have any free cash flow. The numbers here specifically are 2.77 million in dividends paid divided by 2.97 in negative free cash flow, which means that they have to use debt and leverage to make up the difference. All right, next up here, we're gonna talk about Horizon Technology Finance Corporation, HRZN. All right, so Horizon is headquartered in Farmington, Connecticut, and it's a leading venture lending platform that thoughtfully and creatively provides structured debt products to life science and technology companies. Essentially, they're a lender to small and mid-sized companies, but they focus on life science and technology companies rather than lending to just everybody. If we take a look here into their portfolio, we can see who some of their clients are. They've got healthcare, information and sciences, life science, technology, and sustainability, companies that you've probably never heard of because they're small and mid-sized companies here, but lots of different clients that they lend money to and then collect interest payments that they are then passing on to their shareholders. Let's come on down here to their dividend price history right down here. So this is interesting here. They started with these quarterly payments, and then they really drop down here. This is the transition to monthly payments, and pretty much flat here. Flat across the board here. They dropped it a little bit, raised it up again, and that might actually be negative here when we take a look. Then we've got our price history starting back to 2010. We've got it as high as right on $15.50 a share, and then throughout these 10, 11 years, we can see that it kind of dropped down from $16 a share down to as low as maybe $11 a share, $12 a share. It drops here like a rock during COVID. And then it's popped back up here to right around $17 per share. Looking at this data even further, Horizon Technology has no dividend growth streak, which we kind of saw from the dividend payments. Their dividend compound annual growth rate is 0.64% growth on average, though we saw some volatility there. Then we've got a price compound annual growth rate of 1%, 1.08%, so it's positive, but it doesn't have a significant price appreciation. Then we're looking at their payout ratio. We can see that based on the standard measure, net income, we're at 95.85%, and then based on free cash flow, their payout ratio is negative 73.23%. All right, next up here on the list is Gladstone Capital Corporation, GLAD. So Gladstone Capital Corporation was founded in 2001 as one of the very first business development companies funds to focus on investing in loans to lower middle market businesses. We come in here to their portfolio. We can see kind of what they do here and who they lend to. We scroll down here. There are companies like American Trailer Rental Group in Kentucky, Antenna Research Associates in Beltsville, Maryland, ARC Drilling in Cleveland, Ohio, B+D Group Acquisition Incorporated in Tulsa, Oklahoma, and then other types of companies across the United States. This is their transition here from quarterly to monthly. Right down here, they were paying pretty well. Then due to the housing crisis, they dropped from 0.14 monthly to 0.07. They cut their dividend in half here, and it stayed flat almost the entire time, with a little bit of a drop here. Then we look at their price history. Now this is concerning. I mean, it really should be. We're starting at around $18 a share. We pop up as high as 25 here, hit the housing crisis, drop like a rock here down to around $6 a share. And then we've pretty much stayed flat right around that price range there. We're up a little bit higher, over $11 a share, but very flat for the past almost 10 years. And we see that here, we've got no growth rate. We've got no growth streak for their dividend growth. Their compound annual growth rate for their dividend is negative 2.39%, a net loss there, and negative 2.3% on their price history as well. Price history can be flat if the dividend is growing and strong, but if it's not, it's kind of a concern. Then we've got their payout ratio based on free cash flow. Based on net income, it's 97.5%, but based on free cash flow, it's negative 80%. Let's take a look here at Realty Income Corporation, ticker symbol O. All right, so Realty Income is known as the monthly dividend company. It's part of the S&P 500. It's structured as a real estate investment trust, focuses on real estate, and its monthly dividends are supported by the cash flow from over 6,600 real estate properties owned under long-term lease agreements with commercial clients. They've paid 612 consecutive common stock monthly dividends. Let's take a look at their portfolio here. You can see companies like Walgreens are involved here. 98% portfolio occupancy across 56 different industries. Scrolling down here, we can see their top 20 clients here, companies that we have heard of. Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree, Sainsbury's, LA Fitness, AMC Theaters, Regal Cinemas, Walmart, Lifetime Fitness. I mean, guys, these are companies that we have heard of before that are very consistent companies. They have their own profit metrics, or they are profitable companies. Some of them I actually own in my portfolio, which is interesting. I've got Walgreens in my portfolio. They own 248 different properties that Walgreens has on lease, and that makes up 5.5% of their portfolio. Then they've got 7-Elevens, 431 of those, 804 different Dollar General stores, FedEx, 41 facilities. They even own 23 different Home Depot properties. You can see here that as of 2021, you've got quite a bit of diversification here. Yes, we do have a lot of dollar stores, 7.4%. Drugstores make up 7.9%. Convenience stores, 12%. Automotive services, 2.7%. 3.5% for general merchandise. Grocery store, 4.7%. For me, I really like this type of diversification because they're in the types of companies that even during a correction are still going to continue doing business and making money. Grocery stores, people buy groceries even during a recession. Convenience stores, people visit those still. They buy cigarettes, they buy other treats and snacks and gas and things like that. This is what I like to see, guys. This is a pretty thing here. We look at their dividend payment history. It's just a steady climb up this whole time. We don't see any dividend cuts. We look over here at their price history, starting in 1994, worth, what was it, like $8 a share, $7.75, and now it's worth over $60 a share. I mean, yes, Realty Income does focus on having a balanced portfolio, and so they probably choose to hold their dividend a little bit lower than they could be, but it allows for them to have sustainable growth. All right, Realty Income here, 24 years of dividend growth history. Their dividend compound annual growth rate since they launched their company is 5.36% growth every single year in their dividend. Their price history is up 8.47% year over year on average. And then we've got their payout ratio here. Based on net income, it's 83.45%, and based on free cash flow, 87.42%. Both of these are really, I mean, all of this is really strong here. This is why, for full disclosure, I do own Realty Income in my own portfolio. It makes up about 4 to 5%. All right, next up here, let's take a look at Main Street Capital. Main Street Capital, they provide a one-stop capital solution for lower middle market companies seeking to grow or transition ownership. Flexible capital, long-term outlook, and operational autonomy. Let's take a look at their portfolio companies. Who do they have in their portfolio? Companies that they've either lent to or they have an equity stake in. Companies like Affinity, AFG, All Hose and Specialty LLC, Ameritech College, lots of different companies here that they have relationships with and that they have lent to. They started as a quarterly dividend company now, and then they transitioned here to monthly. So we're at what, 0.125%, pretty flat here for 2 or 3 years. Then it's been a slow growth across the board here, and it's been flat here for about 2 years. If we look at their price history, again, it is increasing here. We start at $15 a share, increasing all the way up here to $45 a share before COVID, dropped from 45 to, wow, 15, which is a significant drop. And then it popped up a year again pretty quick, almost 1 year later, almost worth back to what it started at. Let's take a look at these numbers here as well. Their dividend streak, 0 years, very flat on their dividend growth. Their dividend compound annual growth rate, 3.92% over the life of that company. And their price history is positive as well, 7.69% on average growth. Looking here at their payout ratio, based on net income, it's 98.63%. And then for their payout ratio based on free cash flow, unfortunately it's negative. They have no free cash flows here, 115% negative. All right, lastly here, let's look at Prospect Capital Corporation, PSEC. So Prospect Capital is a leading provider of private debt and private equity to middle market companies in the United States with a focus on sponsor-backed transactions and direct lending to established owner-operated companies. It is a business development company here. It says right here under the Investment Company Act, as amended, completed its initial public offering in 2004. So again, business development company means lending to small and medium-sized companies that could otherwise generally not get a loan from a traditional bank. Let's take a look into their portfolio and see who they're doing business with right now. We've got companies like 8th Avenue Food and Provisions, Ace Cash Express, Ahead Data Blue, AmeriLife Holdings, lots of different companies here. Food products, consumer finance, IT services, insurance, and everything in between. We've got their dividend payment here that was rising from 0.10 per payment here. Then it's kind of increased, dropped down here at the end of 2009 into 2010 from 0.4% down to, what is this? 0.1%, pretty significant drop there. It increased a little bit and then it decreased, and it's been flat for a few years. If we look over here at their price history, we can see though, unfortunately, started up here at $15 a share, give or take, popped up a little bit, and then it's been on a steady trend downward ever since 2007. All right, and if we look here, we got 0 years of growth, a negative compound annual growth rate for both dividends and price history. Payout ratio 105% based on net income and 122% based on free cash flow. So when we look at these numbers here, and we look across all these different companies, the only one that really truly makes sense for me is Realty Income. You could make a case for Main Street Capital, although I'm really concerned about their payout ratio, both based on net income and with respect to free cash flow. Now that's for me personally, when I look at all this data, this is the only company that makes sense to own. That's why I only own, I think, one monthly paying dividend stock, which is Realty Income. I do own a few monthly covered call ETFs, exchange traded funds, but we're talking about individual companies here. The only ones that make sense when we look at their price and dividend history, when we look at what this company does, when we look at their price and dividend history, their payout ratios based on free cash flow, net income, the only company that makes sense to own is Realty Income Corporation, in my personal opinion. Whether it makes sense for you to own one of these other companies that has what I would say less than desirable payout ratio metrics, then that's fine, and you may never have a dividend cut, but these companies, most of them have a history of cutting the dividend at least once or twice, which means they might do it again. This is not a buy signal. This is not a recommendation for me. I'm not here to make official investment advice to you guys or make recommendations. I just tell you that in my own portfolio, I do own Realty Income, and I don't own any of these other companies, and I have not seen the evidence that would say, yes, I should own these. Make sure to leave your 2 cents in the comments below, guys. Let me know what you want to see more of, what specific companies here you want to have any questions about, what other dividend matchups you want to see. I'm going to transition here in a few days, in a few weeks, to looking at more head-to-head matchups on certain dividend stocks to see which ones perform best, which one have good metrics right now. So if you would like to see more of that, let me know. Leave your 2 cents in the comments below. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.